What's up guys, it's Chris here. Every now and then you come across an investment that makes you really excited, and this last week was one of those times. So in today's episode we're going to be talking about a share that allows you to invest in property around the world without buying a single building, and not only does it pay you a monthly dividend just like you would get with a normal rental property, but this company has also increased its dividend over 100 times and continues to raise its dividends every year for the last 30 years in a row. And at the end of the episode, we will be buying this share right here on Easyequities, live and in real time, and showing you how you can as well. So if you want to see what that share is, then let's get started. So before we begin, just a quick reminder to hit the like button below and share this video with a friend if you think they might be interested in what we talk about in this episode. Okay, so if you're new here, welcome to Casual Cash, where we talk about finance, investing, and growing your personal wealth. And a big part of that is about finding the right investments to place your money that will help you reach your financial goals. And not only do we talk about it here, but we also walk the talk and show you exactly what we are buying and when, and full breakdowns of our portfolio and passive income. Now, speaking of passive income, that brings us to today's episode. Now, some of you may know that I work in the property industry and I'm a big fan of the business model. You have a building that underlies your asset, which should in theory always increase in value. Then you have tenants who lease that building and pay you rental every single month. So over time, you pay down your bond, get to own the asset that increases in value, plus you get a passive income coming in every single month. Around 80% of the world's self-made millionaires have come from property. Now, usually doing this would take a lot of capital to buy physical buildings and involves risks of getting a tenant or having that tenant default. So we often turn to the stock market to invest in much bigger companies like Growthpoint, Redefine, Fairbest, and others. And in return, we gain access to their larger portfolio and often get dividends paid every 6 months or quarter. But there is also no telling if those dividends will continue or grow or disappear altogether. So with that said, let's get right to today's company and why this company might just be a good option for your passive income portfolio. The share that we are going to be talking about today is called Realty Income Corp. And I know what you're thinking, and yes, the name does say it all. Okay, so let me tell you a bit about this company. Realty Income Corp is an American company that started in California, but don't worry, we can still invest in it from our USA tab in Easyequities that I'll show you later. This company started in 1969 when it bought a single Taco Bell property in Northridge, and they had a vision to create a platform that gave shareholders monthly dividends that increase over time. 25 years later from that one property, they listed on the New York Stock Exchange and expanded to over 12,200 properties around the world and an annual revenue of $3.34 billion. Plus, it has registered a trademark on the phrase, the monthly dividend company. Now, there are a few specific things that makes this property company different, and that has allowed it to do what it has done and provide such reliable dividends that increase in value every single year and over multiple decades in a row, including over the 2008 financial crisis and during COVID in 2020. This comes down to their investment strategy and one specific choice in particular. You see, Realty Income, since their inception, has focused on acquiring freestanding single-unit commercial properties leased to high-quality clients under long-term net lease agreements, which are typically in excess of 10 years. Okay, so for those not familiar with property talk, that means that they buy properties like an office building, for example, that will have only one high-quality tenant. So let's think, for example, like the head office of the Coca-Cola company. And the leases that they sign with them will usually be for a minimum of 10 years. So if you have a company like Coca-Cola with a 10-year lease, you can be pretty sure that you'll be getting your rental every single month so that you can pay your dividends. But in my opinion, the most important part of their strategy is the net lease, which is also called an NNN lease, or more commonly a triple net lease. The beauty of this type of lease is that the tenants, like Coke, will only pay the company their fixed rental amount that increases every year. That means that the cost for the insurance and council taxes and water and electricity and maintenance and operating costs will all be paid by the tenant themselves. Now, why is this important? Well, as you know, in South Africa, electricity can go up by 23% a year, or council taxes can go up by 16%, property insurance just this last year went up by about 20%. So with a triple net lease, the landlord won't be out of pocket for any increases and the tenant instead will be paying for all of them, leaving Realty Income with a consistent and ever-growing rental amount that you can bank on each and every month, and that's how they can ensure their dividends to shareholders predictably over the last 30 years. It's quite brilliant actually. But let's talk about what this means for you, and as an investor, exactly what kind of returns can you be expecting if you were to invest in this company. Well, first, let's take a look at the graphs and the metrics. As you can see, their ticker symbol is O, which I think is quite cool. Now, over the last year, the share price is down by 12%, which follows the market and is because of the high interest rates since early last year that will affect the repayment of their borrowings. And we can see that dip start from 2022 in the 5-year graph, which is up by 17%. For me, that shows a good entry point at a lower price, and because looking forward, analysts have anticipated for interest rates to start falling from November this year and throughout the next year, but of course, no one has a crystal ball. And lastly, when you zoom out to the max graph, you can see the real picture of this company over the last 30 years. Now, on this channel, I often say that we are looking to be long-term investors, to find good companies with a good value proposition and to hold them over the long term. This graph is a very good representation of the type of long-term sustainable growth that I myself often look for. Now keep in mind that this 619% growth is only the share price growth, and there is still 30 years of monthly dividends that have been paid on top of that growth and could be potentially used to be reinvested during that time. Now, if you do choose to reinvest those dividends, let me show you an absolutely crazy table here. This chart shows the results from major stock indices versus Realty Income if you reinvest the dividends. And as you can see, Realty Income is blowing the others out of the water, including the holy grail of investing, the S&P or Standard & Poor's 500 index here in dark blue. It has more than doubled the return of the S&P 500 over 30 years, which is a very, very big statement. So now that we've looked at the share price graph and the overall returns, let's get a bit more granular and look at what you yourself can expect as an investor. Now, we do need to be practical here. We are in a time of very high inflation and with interest rates the highest they have been in a decade. That means the debt that Realty Income has of $18 billion will cost more to repay until they start coming down, which may only be next year. So until that time, we can't expect major share price growth, or it may even still continue downwards until that time that interest rates come down. So for me as a long-term investor, that sounds great because I can dollar cost average all across this year and get some low prices with higher dividend yields before it starts going back up. But if you are a shorter term investor, the price movements might be harder to stomach, so keep that in mind when making your decision. Then there is the price to earnings ratio at 45, which is higher than some of its peers in the industry, like Simon Property Group, which we also own at 15. A higher PE ratio means the market values the stock higher, but too high can be a bad thing if the share is overvalued. But as you can see, it's usually a forward-looking metric based off of its 6.8% earnings growth per year. But with that being said, the stock is still trading at an estimated 33% below its fair value, so maybe it still has some 30% room upwards to go before reaching its pre-COVID level share price. And with a 6.8% revenue growth and 5% earnings per share growth, this looks promising over the long term. And with that, the company also has properties in the USA, Alaska, Puerto Rico, the United Kingdom, Spain, and Italy, so it is well diversified against geographical risks. But let's get to the important part that we are all wanting to know. Let's get to the dividend payments and how much income you can expect. So first of all, Realty Income Corp is right now paying a dividend of 5.1%, which for reference in the USA market is very good. And based on its historical yield, you can probably expect around this percentage going forward. But this is an interesting part because, as you know, the share price will determine the dividend yield. So if the share price goes up, the dividend percentage goes down, and if the share price goes down, the dividend percentage per share will go up. Like we said in 2022, when interest rates started to rise and the share price started to go down, we can see here the dividend yield start to go up. So for every 100 Rand you invest, you will get increasingly higher dividends the more the price goes down. But this green line shows that dividends have kept going up regardless. So as the company has shown over 30 years, that over the long term their share price should ultimately grow and the dividend should grow right along with it. And guys, that is Realty Income Corp. Now they are part of the S&P 500 and the S&P 500 Dividends Aristocrats, so there is tons of information online and on their own website that you can look through if it is something you are considering to buy. So make sure you do your research as to whether it is the right investment for you. But for me, it is something I would like to add to my portfolio for capital growth and income generation and continue to add to and grow over the years. So if you do want to invest in this company, I'm going to invest in it live and in real time right now so I can show you how. So the platform I use is Easyequities, and if you don't have an account, you can use the link in the description for a free 50 Rand to start your investing journey. Because it's a USA company, you will need to convert your rands to dollars by going to menu, then inter-account transfers and EasyFX. Here you can transfer money from your rand account to your dollar account and click transfer now. It takes about half a day to reflect and then you can buy your shares. So we're going to go right now to USD and invest now, then click on equities and search for realty income. Then we're going to go into it and we're going to invest an initial amount of $34.51 and click buy at open, and there you go, we're done. So guys, that is it for today's episode where we show you how you can invest in worldwide property for a monthly income from South Africa. If you enjoyed it, please hit the like button and subscribe if you haven't already. If you want to download a spreadsheet that will help you track all of your investments and their income automatically based on the numbers and companies that you put in, along with graphs and charts that fill in all by themselves to track your progress and your journey towards financial freedom or retirement, then you can click on the link in our description to join the Casual Cash Club on our Patreon. I also post all of my buys and sells in real time, like this one today. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.